Based on the historical data and forecast, Bitcoin has shown volatility with a general upward trend. The RSI consistently fluctuates, but it has recently moved above 40, indicating a potential shift from oversold to neutral territory. The Bollinger Bands show that the price has been trading within the bands, suggesting periods of consolidation and expansion. Considering the support price of $64,000 and the resistance price of $66,300, and the forecast for the next week, I propose a strategy focused on capitalizing on short-term upward movements while managing risk. My recommended strategy is to implement a buy-the-dip approach. We will enter a long position at $62,800, anticipating a bounce from the recent dip and potential upward momentum. To mitigate risk, the stop loss will be set at $62,000, just below the lower Bollinger Band, providing a buffer against unexpected downward movements. The initial target price will be $63,800, near the upper Bollinger Band and within reach of the resistance level. If the price reaches $63,800, we will reevaluate the market conditions and consider adjusting the stop loss to protect profits and potentially extend the target price towards the $66,300 resistance level. This strategy combines technical indicators with price action analysis to achieve high returns while minimizing potential losses. Based on the historical data and forecast, Ethereum shows a generally upward trend, supported by the consistently rising forecast prices. The RSI fluctuates between 39.4 and 64.1, indicating periods of both oversold and overbought conditions. Considering the support price of $1,850 and resistance price of $2,020, a long position is recommended. I suggest entering a long position at $1,800, with a stop-loss order set at $1,770 to mitigate potential losses. The initial target price is $1,880, aiming to capitalize on the projected upward movement. To refine the strategy, I will incorporate the Bollinger Bands. When the price touches the bottom band, it indicates an oversold condition, which aligns with our long position. As the price moves towards the upper band, a profit-taking strategy can be implemented. I suggest increasing the target price to $1,890, as the forecast predicts a price of $1,890 on July 21, 2026. This combined strategy, leveraging RSI and Bollinger Bands, offers a balanced approach to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB shows a slight upward trend. The RSI consistently remains below 52, indicating an oversold condition, suggesting potential for a bounce. The Bollinger Bands have been widening recently, indicating increased volatility and potential for significant price movements. Considering these factors, I recommend a long position strategy. We will enter a long position at $567 when the price touches the support level. The stop loss will be set at $550 to protect against a potential downward break. The initial target price will be $589, aligning with the recent resistance level and the forecast price on July 21, 2026. To optimize this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI rises above 60 within the trade, we will adjust the target price to $591. Conversely, if the price touches the lower Bollinger Band, we will tighten the stop loss to $560. This dynamic approach allows us to capitalize on both upward momentum and mitigate downside risk. This portfolio combines the support level entry with RSI and Bollinger Bands adjustments, creating a robust and adaptable investment strategy. Based on the historical data and forecast, XRP exhibits a slightly downward trend, but with considerable volatility. The RSI consistently remains below 80, indicating that XRP is not currently in overbought territory. However, the RSI values have been fluctuating, suggesting potential for short-term price swings. The Bollinger Bands show that the price has recently been near the lower band, hinting at a potential bounce. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. Specifically, I suggest a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. The entry price should be $1.07. To manage risk, set a stop loss at $1.05, just below the support price of $1.09. Aim for a target price of $1.17, aligning with the upper Bollinger Band. To refine this strategy, I propose a portfolio that prioritizes risk management and potential for high returns. The primary strategy is the long position based on RSI and Bollinger Bands, with an allocation of 60% of the portfolio. A secondary strategy is to initiate a long position when the RSI reaches 30, with an entry price of $1.08, a stop loss at $1.06, and a target price of $1.16, accounting for 30% of the portfolio. Finally, a small 10% allocation should be reserved for a short position when the RSI exceeds 70, with an entry price of $1.14, a stop loss at $1.17, and a target price of $1.1. This diversified approach balances the potential for gains with safeguards against significant losses, maximizing the overall return. Based on the historical data and forecast, Solana shows a slight downward trend, testing the support level of $77.8 consistently. The RSI fluctuates, recently indicating oversold conditions with a reading of $46.5 on July 14, 2026. The Bollinger Bands have been widening, suggesting increased volatility, with the price currently near the lower band. My strategy will focus on capitalizing on potential rebounds from the support level, incorporating RSI and Bollinger Band signals. I recommend a long position entry at $77.1 on July 15, 2026, coinciding with the forecast price and the support level. A stop loss should be placed just below the support at $77 to protect against a breakdown. The initial target price is set at $77.6, aligning with the forecast price for July 17, 2026, and a potential bounce from the support. If the price breaks through the upper Bollinger Band, consider adjusting the target price to $77.8. This strategy combines support level trading with technical indicators to manage risk and maximize potential returns. Based on the historical data and forecast, TRON shows a slight upward trend, oscillating within the support and resistance levels of $0.324 and $0.332. The RSI indicator, fluctuating between 37.7 and 57.8, suggests that the asset is neither significantly oversold nor overbought. The Bollinger Bands indicate periods of volatility and potential price reversals. Considering these factors, I recommend a moderate long position strategy. We will enter a long position at $0.326, coinciding with the current forecast price and the recent trading range. The stop loss will be set at $0.324, just below the support level, to limit potential losses. The target price will be $0.332, aligning with the resistance level, aiming for a reasonable profit within the established range. To enhance the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 20, oversold, we will consider entering a long position. Conversely, if the RSI exceeds 80, overbought, we will consider exiting the long position or shorting. When the price touches the lower Bollinger Band, it signals a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. Combining these indicators, the portfolio will prioritize the long position at $0.326 with a stop loss at $0.324 and a target price of $0.332, adjusting based on RSI and Bollinger Band signals for dynamic risk management and potential profit maximization. Based on the historical data and forecast, Dogecoin has been exhibiting a downtrend with periods of consolidation. The RSI consistently dips below 30, indicating oversold conditions, and occasionally approaching the oversold level of 20. The Bollinger Bands show that the price is currently near the lower band, suggesting potential for a bounce. Considering these factors, I recommend a long position strategy focused on capitalizing on short-term rebounds. We will enter a long position at $0.0715, coinciding with the first day of the forecast. A stop loss will be placed just below the support level at $0.071 to mitigate potential losses if the downtrend continues. The initial target price will be set at $0.0741, aligning with the forecast price on July 19, 2026, and the recent resistance levels. To refine this strategy, we'll incorporate a dynamic trailing stop loss based on the Bollinger Bands. If the price moves above the center band, the stop loss will be adjusted to the lower band. If the price reaches the forecast price of $0.0739, we will move the target price to $0.075. This approach allows us to capture gains while protecting against adverse price movements. If the RSI reaches 80, we will close the position and take profits. This combined approach, utilizing RSI, Bollinger Bands, and support/resistance levels, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Zcash exhibits a generally upward trend, breaking through the resistance level of $528. The RSI indicates periods of oversold and overbought conditions, with recent values trending towards the overbought zone, suggesting potential for a pullback. The Bollinger Bands have been widening, indicating increased volatility, and the forecast prices consistently above $515 further reinforce an optimistic outlook. Therefore, I recommend a long position strategy focusing on capitalizing on potential pullbacks while maintaining an overall bullish stance. Specifically, I suggest entering a long position at $515, coinciding with the first forecast price. Set a stop-loss order at $508, just below the recent low and the bottom of the Bollinger Bands, to mitigate potential losses. The initial target price should be $547, aligning with the forecast price for July 21 and the upper Bollinger Band. If the price reaches $547, consider trailing the stop-loss upwards to protect profits. If the price continues to rise, a secondary target price of $567, based on the final forecast price, can be set. This strategy combines the momentum from the upward trend, RSI signals, and Bollinger Band dynamics to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Stellar shows a downtrend. The RSI consistently fluctuates between 42.4 and 56.6, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential trend reversal. The forecast data projects further decline, with prices ranging from 0.182 to 0.184. Given these factors, I recommend a short position with an entry price of $0.184. The stop-loss should be set at $0.187, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price is $0.178, aligning with the lowest forecast price. To refine this strategy, we'll incorporate RSI signals. When the RSI falls below 40, it signals an oversold condition, providing a potential entry point. Conversely, an RSI above 60 suggests an overbought condition, indicating a possible shorting opportunity. Considering the current RSI around 45.3, and the forecast of continued decline, I'll maintain the short position. If the RSI drops below 30, consider tightening the stop-loss to $0.184. If the RSI rises above 70, consider exiting the position and re-evaluating the market. This combined approach, blending trend analysis with RSI signals, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a slight upward trend. The RSI values have generally fluctuated between 40 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Considering the current RSI around 60 and the forecast predicting prices above $8, I recommend a long position strategy. We will enter a long position at $7.93. The stop-loss should be set just below the recent support level at $7.85 to protect against potential downside risks. The target price will be $8.25, aiming to capitalize on the anticipated upward movement. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it could indicate a potential buying opportunity. However, given the current trend, we'll stick with the initial strategy. Therefore, the portfolio will consist of a long position with an entry price of $7.93, a stop-loss at $7.85, and a target price of $8.25. This approach balances risk and reward, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Worldcoin demonstrates a sideways trend with a support level at $0.382 and a resistance level at $0.42. The RSI indicates that the asset is currently in the oversold territory, fluctuating between 34.8 and 47.0, suggesting a potential for a bounce. The Bollinger Bands show that the price has been oscillating within the bands, with the bottom band consistently providing support. The forecast for the next week predicts a relatively stable price range between $0.392 and $0.408, reinforcing the sideways trend. Therefore, a strategy focusing on short-term price swings within this range is recommended. My recommended strategy is a combination of RSI and Bollinger Bands, with a slight bias towards a bullish outlook. I suggest entering a long position at $0.392, coinciding with the first forecast price and the support level of the Bollinger Bands. Set a stop loss at $0.382, just below the support price to mitigate potential losses. For the target price, aim for $0.42, the resistance level. If the price hits $0.42, consider taking profits and waiting for the price to retrace back to the oversold territory before entering another long position. This strategy aims to capitalize on the short-term upward momentum while managing risk effectively. Based on the historical data and forecast, Ethereum shows a generally upward trend, supported by the consistently rising forecast prices. The RSI fluctuates between 39.4 and 64.1, indicating periods of both oversold and overbought conditions. Considering the support price of $1,850 and resistance price of $2,020, a long position is recommended. I suggest entering a long position at $1,800, with a stop-loss order set at $1,770 to mitigate potential losses. The initial target price is $1,880, aiming to capitalize on the projected upward movement. To refine the strategy, I will incorporate the Bollinger Bands. When the price touches the bottom band, it indicates an oversold condition, which aligns with our long position. As the price moves towards the upper band, a profit-taking strategy can be implemented. I suggest increasing the target price to $1,890, as the forecast predicts a price of $1,890 on July 21, 2026. This combined strategy, leveraging RSI and Bollinger Bands, offers a balanced approach to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethena shows a slight upward trend. The RSI indicates that the asset is currently in a neutral to slightly oversold territory, fluctuating between 34.9 and 53.9. The Bollinger Bands suggest periods of volatility, with the price occasionally touching or nearing the lower band. Considering the support price of $0.0807 and the resistance of $0.0855, a strategy combining RSI and Bollinger Bands is recommended. I propose a long position entry at $0.0779 with a stop-loss set at $0.0747. The initial target price will be $0.0839, near the recent high, and a trailing stop-loss can be implemented to capture further gains if the price continues to rise. To refine this strategy, I will incorporate the RSI and Bollinger Bands. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it presents a buying opportunity. Conversely, when the RSI exceeds 70, indicating an overbought condition, and the price touches the upper Bollinger Band, it signals a potential selling point. Considering the forecast price of $0.0794 on July 21, 2026, I recommend holding the long position, adjusting the stop-loss to $0.0765 to protect profits. The target price can be adjusted to $0.0855, aligning with the resistance level. This blended approach should yield high returns by capitalizing on both momentum and volatility. Based on the historical data and forecast, Pendle exhibits a generally upward trend, supported by the consistently strong support price of $1.5 and the forecast prices hovering around $1.55 to $1.6. The RSI values fluctuate, but mostly remain above 50, indicating a bullish sentiment. The Bollinger Bands show that the price has been moving within the bands, with recent days nearing the upper band, suggesting a potential for further upward movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $1.55, placing a stop-loss order at $1.46 to limit potential losses. The initial target price will be $1.6, aiming to capitalize on the anticipated upward trend. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop-loss at $1.42 and a target price of $1.58. Conversely, if the price touches the upper Bollinger Band, we will consider taking profits at $1.58. This combined approach leverages both trend analysis and momentum indicators to optimize returns while managing risk. The most efficient portfolio will be a combination of these strategies, dynamically adjusting position size based on market conditions. Based on the historical data and forecast, Injective shows a mixed trend with periods of volatility. The RSI fluctuates between 42.1 and 54.2, indicating neither consistently oversold nor overbought conditions. However, the Bollinger Bands suggest potential trading opportunities. The price has been bouncing between the support price of $4.73 and the resistance price of $5.06. Considering the forecast for the next week, starting at $4.68, I propose a moderately bullish strategy. We will initiate a long position at $4.68, placing a stop-loss at $4.60 to limit potential losses. The initial target price will be $4.83, aligning with the recent resistance level and the forecast price on July 18, 2026. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, indicating an oversold condition, we'll consider entering a long position at the prevailing price, setting a stop-loss at $4.60 and a target price of $4.83. Conversely, if the price touches the lower Bollinger Band, which occurred several times in the past 2 weeks, it signals a potential buying opportunity. We'll enter at the price touching the lower Bollinger Band, set a stop-loss at $4.58, and target $4.83. This combined strategy aims to capitalize on both trend-following and mean reversion opportunities, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Virtual's protocol shows a fluctuating trend with periods of consolidation and brief upward movements. The RSI consistently fluctuates around the 40 to 60 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility. Considering the support at $0.53 and resistance at $0.702, a moderately bullish strategy is recommended. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Our strategy will involve a long position entry at $0.544, coinciding with a potential bounce from the lower Bollinger Band and near the support level. A stop-loss order will be placed at $0.53, just below the support level, to limit potential losses. The initial target price will be $0.60, aligning with the upper Bollinger Band and a reasonable move towards the resistance. If the price breaks through $0.60, we will adjust the target price to $0.702, the resistance level, for maximum profit. The RSI is currently around 40, so we are not in an oversold position. This combined approach balances risk and reward, capitalizing on potential upward momentum while safeguarding against significant downside risks. Based on the historical data and forecast, Falcon Finance shows a downtrend from July 1, 2026, to July 14, 2026, with a recent price rebound. The RSI consistently hovers below 40, indicating a generally oversold condition, with the lowest point at 30.1 on July 9, 2026. The Bollinger Bands show that the price has been fluctuating within a narrow range, recently touching the lower band, suggesting potential for a bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a buy strategy when the RSI falls below 30 and the price touches the bottom of the Bollinger Bands. Specifically, I propose entering a long position at $0.0585 when the RSI drops below 30 and the price hits the lower Bollinger Band. Set a stop-loss order at $0.0575 to limit potential losses if the downtrend continues. Aim for a target price of $0.0608, aligning with the forecast price on July 21, 2026, and the recent resistance level. This strategy combines RSI and Bollinger Band signals for confirmation, providing a balanced approach. This portfolio will generate high returns. Based on the historical data and forecast, DECRED shows a clear upward trend. The price has consistently moved higher, breaking through previous resistance levels. The RSI has been fluctuating, but recently crossed into overbought territory, suggesting a potential pullback before further gains. The Bollinger Bands have been widening, indicating increased volatility. Considering these factors, I recommend a long position with an entry price of $12.4. The stop-loss should be set at $12.7, just below the support level, to protect against a sudden downturn. The initial target price is $14.4, aligning with the forecast price for July 21, 2026. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 36.5, it indicates an oversold condition, suggesting a potential entry point. Conversely, when the RSI exceeds 70.4, it signals an overbought condition, prompting a consideration of taking profits or tightening stop-loss levels. If the price touches the bottom of the Bollinger Bands, it might be a good entry point. The portfolio will prioritize the long position with a dynamic stop-loss adjusted based on the RSI and Bollinger Band signals, aiming for a target price of $14.4. Based on the historical data and forecast, Zcash exhibits a generally upward trend, breaking through the resistance level of $528. The RSI indicates periods of oversold and overbought conditions, with recent values trending towards the overbought zone, suggesting potential for a pullback. The Bollinger Bands have been widening, indicating increased volatility, and the forecast prices consistently above $515 further reinforce an optimistic outlook. Therefore, I recommend a long position strategy focusing on capitalizing on potential pullbacks while maintaining an overall bullish stance. Specifically, I suggest entering a long position at $515, coinciding with the first forecast price. Set a stop-loss order at $508, just below the recent low and the bottom of the Bollinger Bands, to mitigate potential losses. The initial target price should be $547, aligning with the forecast price for July 21 and the upper Bollinger Band. If the price reaches $547, consider trailing the stop-loss upwards to protect profits. If the price continues to rise, a secondary target price of $567, based on the final forecast price, can be set. This strategy combines the momentum from the upward trend, RSI signals, and Bollinger Band dynamics to maximize potential returns while managing risk effectively. Based on the historical data and forecast, KAITO shows a clear upward trend. The price has been consistently moving towards the resistance level of $0.869. The RSI readings, fluctuating between 58.4 and 71.4, suggest that the asset is not yet in overbought territory, indicating potential for further gains. The forecast for the next week predicts a continued rise, with prices reaching as high as $0.826. Considering these factors, I recommend a long position strategy. The entry price should be $0.731, coinciding with the first day of the forecast period. A stop-loss should be placed just below the support level at $0.726, set at $0.72 to provide a buffer against minor pullbacks. The initial target price should be $0.801, aligning with the forecast peak. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading within the bands, suggesting moderate volatility. The strategy will be adjusted based on the RSI and Bollinger Bands. If the RSI falls below 20, oversold, while the price is near the bottom Bollinger Band, a long position is warranted with an entry price of $0.48, a stop-loss at $0.46, and a target of $0.55. Conversely, if the RSI exceeds 80, overbought, While the price is near the top Bollinger Band, a short position is considered with an entry price of $0.749, a stop loss at $0.75, and a target of $0.73. Combining these strategies, the most efficient portfolio involves a long position with an entry price of $0.731, a stop loss at $0.72, and a target price of $0.801, capitalizing on the prevailing upward trend and forecast.